of a trough very simply by either price crossing a VTL or by price crossing an FLD. Okay, it's as simple as that. Once VTLs and FLDs have been crossed for the relative cycles, a cycle trough will be completely confirmed. I see a question from Vita, so I'll get to that in a moment. Okay, so those solid diamonds mean that that position of that trough has been absolutely confirmed. As a matter of interest, how is it that on the one analysis the software confirms the trough on the 9th of August, and on this analysis it confirms the trough on the 4th of October. That's a subtlety in it, in the process, which I won't go into, but Sentient Trader is able to move troughs around for you if you tell it to. Okay, so I don't think I've got time now to explain the details of that. Hollow troughs. Okay. Many people, when they're practicing Hurst's cyclic principles or Hurst's analysis, when they're doing it manually, have a tendency to want to draw diamonds on their charts too soon. I call it the diamond fetish. I started, I analyze markets manually by hand using pencil and paper. For a long time before I had software to do it for me. I had to make the software myself, which is why it took so long. And I noticed when performing the analysis by hand, which is a really important thing to do, and I'd recommend it to anybody. If you have done any of our workshops, you'll know that we strongly recommend that you analyze by hand. You can print charts out from Sentient Trader and perform the analysis by hand. It's a very useful thing to do. But you tend to develop diamond fetish, which means that you want to draw diamonds on that chart. Okay. In fact, the drawing of a diamond is not very important, and you should never rush to do it. Why? Because what's more important is what's happening next in the analysis. And if I zoom in even more detail and show you, these circle and whiskers at the foot of the chart are in many ways much more important than the actual drawing of the diamonds. Okay, you only position these hollow diamonds once you have enough evidence that a trough has formed there. Okay, and in fact, Sentient Trader will delay drawing a diamond until at least 1.5 times the cycle length has occurred before it actually draws the diamond, because it is better to delay drawing diamonds and work with the forecasting potential of the circles and whiskers than to draw those diamonds too early. Okay, I'm beginning to run out of time, and the questions are coming in thick and fast. So I hope that answers Jitendra's question. He asked, do the diamonds appear after the effect if the peak has been made? First of all, diamonds have nothing to do with peaks. Diamonds are about troughs, Jitendra. So diamonds are drawn when troughs have occurred. And the summary of that is that don't be too obsessed about whether a diamond has been drawn or not. You will often see a situation, we're not seeing it in this chart here, but you will often see a situation where a clear trough looks as though it has been formed, but you're not seeing a diamond at the foot of the chart. And some people have sent us emails saying, why isn't Sentient Trader putting the diamond at the foot of the chart? That is following Hurst's analysis process, which is that if this price came down to form a bit of a trough now and then bounced up again, Sentient Trader might still be showing the circle and whisker formation at the bottom. Don't rush to draw your diamonds. Okay, there's no benefit to rushing and drawing your diamonds. What's important is a 10-day trough is expected, and there it is. And you can draw a question mark there, and Sentient Trader often does draw a question mark there, because if you know that might be a trough of the 10-day cycle, you can make trading decisions on that basis. Don't rush to draw your diamonds. Okay, let me see if I can answer Vito's question. Also, if we look at the latest wedge, it is looking pretty bearish given the prior move from the peak is very solid down move, I would say. Great, so Vito is taking a look at the wedge shape here, and although I am, I don't want to use the word obsessed, but although I am terribly enthusiastic about cyclic theory, I do believe it's very important to combine your analysis with any other methods that you're using. Vita's talking about the wedge. There are various different ways of drawing it. Possibly, that's one of the wedges, or perhaps a slightly better wedge is that one there. A wedge is a classical technical analysis formation where price, I haven't drawn that very well, let me give that another go, where price effectively gets into a tighter and tighter range, going up, or down, and then it breaks. Once it breaks the lower band of that wedge, it will of course also probably be a valid trend line, very interestingly, then you expect a very strong move downwards. So I absolutely agree. When classical technical analysis using triangles or wedges or flags or any of those sorts of shapes, when they are providing forecasts that are in accord with your Hurst cyclic analysis, those are very powerful times, and you really need to sit up and take notice. And as Vita says, it is right at the multiple pivot zone where the price might flick. Right, there we go. So certainly we need to be very cautious about what might be happening in the market at the moment. Nathan says, how I can on the day counter like your screen. Okay, how can you add counts like the bar counts that I have there? It's very simple. You right click in Sentient Trader. You right click and it'll say there, count bars from bar number 3726. There we go, and there's your bar count. Okay, bar counts are used mostly for intraday trading. They're very useful things that one uses for intraday trading. They don't get saved with your charts when you save a chart and close it, so you have to add them again if you're working end of day or intraday. But they are very useful intraday, because as a cycle trough comes in intraday and you're watching the markets unfold, they're very useful just for tagging those troughs that you see coming in. Of course, you can also count the bars from peaks and so on if you want to, although peaks are less important. Now, I would like to. I pretty much reached the time limit for today's Trader Chat, but I would like to point out something else. I said that I would come back to speaking about the most recent action in the stock market. And I was speaking earlier about fundamental interaction. I banged on about it for ages. And so I'd just like to make one final little comment about fundamental interaction. It's very difficult, if not impossible, to identify fundamental interaction when it occurs. I suspect, however, that the price action that we've seen just in this last week or two might prove to be some form of fundamental interaction. You can only tell with any degree of certainty when you look back. But I think that the markets are behaving in a manner that I can only describe as manic around the world. They are moving with tremendous strength. And one of the clues to identifying potential fundamental interaction is to look at what's happening today. And what I am going to show you now has nothing to do with Trader Chat, really. It has to do with Signals Chat. Her signals, of course, are generated by Sentient Trader. So I'm showing the same kind of thing. But one of the ways to identify fundamental interaction is to take a look at what's happening intraday. And when I was that chart is zoomed out. When I was taking a look at my Hurst signals earlier, I think it was yesterday, I noticed something very interesting in the Russell 2000. And I'm showing it here on the chart. Do you see this sudden rise in price in the Russell 2000? Sudden rise in price. And this is a 15-minute bar chart that I'm looking at. So this was for a period of, now that I've drawn on it, I can't see what the time scale is. But it was a very short time period. This is a 15-minute chart. So that each one of those is about 4 hours. So this was a price interaction that occurred over a period of about 6 to 8 hours. And that is almost a textbook fundamental interaction, okay? For a period of 6 to 8 hours, rocketed upwards, and then it rocketed downwards. Now, when you have fundamental interaction, you get various different kinds. I've discovered in my experience, you get various different kinds. And there is a kind of fundamental interaction I've noticed where you see lots of these things happening intraday. So the market's clearly moving down here, and the market's been sort of bouncing around a little bit, but not moving very strongly. But you get these sudden bursts up and then down again. That is, to my mind, a very dangerous market. Now, this is the Russell 2000, which is an index in America. What does this have to do with you in Australia? I believe that the markets are beginning to show fractures. I think that they're beginning to show very dangerous warning signs, and this is one of them, the Russell 2000. Did the same thing happen in other markets? No. Interestingly, they didn't. Let's just have a look at the S&P 500 for the same period. As you can see, in the same period, other markets, the S&P 500 went straight up at the same time. Then it came down again. Then it bounced, and then it came down again. It looks more like a genuine cyclical move. So it wasn't a perfect fundamental interaction. But when those kinds of things start happening intraday, I believe it's a warning sign. I believe we need to be careful. So in summary, I would like to just leave you with the recommendation that you watch this market very carefully. I know it's been moving up and it keeps going bullish, and I know I was bearish last week as well. But sooner or later, this market is going to crack, and I suspect it might be sooner rather than later. And when it does crack, I suspect we're going to be in for a very nasty downside move. So thank you very much for being with me today on Oz Trader Chat. And thank you very much for your interest in Sentient Trader. Best of luck to all of you.